Good morning, everyone. This is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 14th of February. In the US, the main event will be Fed Chair Yellen's semi-annual Humphrey Hawkins testimony on monetary policy before the Senate Committee on Banking, Housing and Urban Affairs. She will present the same testimony before the House Committee on Financial Services tomorrow. Although the testimony will be the same on both occasions, we expect market participants to pay extra attention to the Q&A sessions. In particular, they may be on the lookout for any fresh hints regarding her view on the economy and whether she is likely to vote in favor of a rate hike in the upcoming policy meetings. The Fed chair was relatively upbeat in her latest speech, indicating that the US is near maximum employment and that inflation is moving towards the Fed's goal. She also said that the timing of the next rate hike will depend on the economy over the coming months, given that since then US data have been generally strong if one overlooks the disappointing wage growth print in January. We do not see a material reason for Yellen to deviate from her previously optimistic stance. Overall, confident remarks from the Fed chief with regards to the economy and the Fed's progress towards its dual mandate could cause the probability for a March hike to surge, and may thereby bring the dollar under renewed buying interest. Currently, that probability is almost 18% according to the Fed Fund futures. Euro-dollar traded lower on Monday after it tested as a resistance the prior upside support line taken from the low of the 16th of January. However, the slide was stopped by the 105.90 support level, marked by the low of the 19th of January. The pair has been trading within a short-term downside channel since the 2nd of February, and as such we maintain the view that the near-term bias is negative. A clear dip below 105.90 would confirm a forthcoming lower low on the 4-hour chart and is possible to open the way for our next support of 105.40. As for the next of today's events, during the European day we get CPI data for January from the UK. The consensus is for both the headline and the core CPI rates to have risen further. Even though further surge in these rates may support the pound at the release, we do not expect such an increase to materially affect the Bank of England's neutral policy stance, at least in the short term. After all, at the press conference following the latest Bank of England meeting, Governor Carney made it clear that, on the whole, the Monetary Policy Committee remains willing to look through above target inflation and that investors should not expect rate hikes anytime soon. Euro sterling slid yesterday, falling below the support now turned into resistance of 0.8490 and the neckline of a head and shoulders pattern which started to form since the 22nd of December. This keeps the short-term bias negative, and as such we would expect a dip below 0.8450 to set the stage for extensions towards our next support of 0.8380. Accelerating UK inflation today could prove the catalyst for such a slide. As for the bigger picture, the rate continues to trade above the long-term uptrend line taken from the lows of November 2015. As such, we would like to see a decisive close below that line before we get confident on larger bearish extensions. In Germany, the ZEW survey for February is due out. The forecast is for the expectations index to decline, but for the current conditions figure to tick up. On balance, we think that deteriorating expectations are likely to overshadow improving current conditions. Even though this survey is usually not a major market mover for the common currency, this could cause the German DAX index to correct a bit lower. We also get the nation's GDP data for the fourth quarter and the final CPI figures for January. From Eurozone, we get the second estimate of quarter 4 GDP and industrial production data for December. As for the US economic data, we get the NFIB Small Business Optimism Index and the PPI both for January. Nonetheless, considering that investors will likely have their gaze locked on Yellen, these indicators may pass unnoticed. Besides Chair Yellen, we have two more FOMC members scheduled to speak today: Dallas Fed President Robert Kaplan and Atlanta Fed President Dennis Lockhart. For more information, please read the full comment on ironfx.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.